Good evening, good evening, good evening, good evening, good evening. Welcome to Tuesdays with Terrence. Let's go to Instagram and make it public and make it shine. How are you beautiful people doing? Hope everyone's doing fine. Hope everyone's doing well. Welcome to another episode of Tuesdays with Terrence. My name is H. Terrence Bardui. Some people call me H. Some people call me Havis. Some people call me Terrence. Some people call me Mr. Bardui. And if you're from the 7, I'm losing my mind. Whitey Kubuli, the Commonwealth of Dominica, tall is her body. You call me little boy, even from Point Michelle, aka La Pointe St. Luke's Parish. You call me Luke Boy. Dominica made me, Boston raised me. Now the South sustains me. What I like to do, I always like to put this on WhatsApp, so I can have it showing already. So what we're going to do is go to YouTube and pull it up so that people can see Terrence live and in action right now. And I'll be able to put it on YouTube now so everybody can, actually WhatsApp, so everybody can take a look at it right now. And we can get it going. So how are you doing? Hope you're having a great week. Hope you are doing well. It's Holy Week if you're a Christian. It's Holy Week even if you're not a Christian. If you're Jewish, it's Passover. So, this is the time that we celebrate, the week of Christ's crucifixion and resurrection. As a matter of fact, I'll be playing Judas in a play this weekend. Judas Iscariot. Can you believe that? Lord have mercy. Lord have mercy. Let me say I am live now so people can watch. Not love. I am live now. All right. So how are you beautiful people doing? Let me see who's in the chat so I can give a shout out to them. Mr. Arvin Vasa, I want to say welcome, and everybody else who's coming into the show. Welcome to Tuesdays with Terrence. It's another beautiful day in the neighborhood. So what we're going to do, we're going to play our theme song and get started. It's another beautiful day in the neighborhood. Aha! So you hear that? I tried my speaker, making sure it works, man. We got to make sure my speaker's working. So today, let's get it going and start the show. Make sure my speaker's working. Boom! Tuesdays with Terrence. Dominica made me, that's where it all began. Island breeze, coconut trees, the heart of my plan. From the hills and the smiles to the songs of the sea, that island spirit molded the person I'd be. Boston raised me with its hustle and grind. City like shining dreams intertwined. In the heart of this town, I found my way. A licensed financial pro, ready for the fray. Welcome to Tuesdays with Terrence. How are you tonight? Hope you're doing well. Welcome. On those snowy streets, learn to stand tall, navigating life, every rise, every fall. From the commons to the brownstones, I made my claim. With every lesson learned, I embraced my name. Boston raised me with its hustle and grind. Welcome. City lights shining, dreams intertwined. In the heart of this town, I found my way. Mr. Stewart, how you doing, young man? Welcome. Yes. Annuities tonight. Annuities. Celebrating 10 years at ACA. Tomorrow will be 10 years, Mr. Stewart. 10 years. Now the South sustains me with its warm embrace, a community of strength and love in every space. From the bayous to the beaches, I found my place in In this journey of finance, I've learned to chase grace. Dominica made me, Boston raised me high. The South sustains my soul as I reach for the sky. With every sunrise, I'm thankful and free. A licensed financial pro, just being me. So here's to the roots that shaped who I am. From Dominica's beauty to Boston's Grand Slam. In the South I stand strong with purpose and pride. Together with my journey, side by side. Yeah. Welcome to another episode of Tuesdays with Terrence. It's a festive time for me. Tomorrow will be 10 years. 10 years I've been with American Classic Agency. See this pin right here? ACA, the company that cares, man. 10 years. April 1st, 2016, I came on board, and it's been a beautiful journey. So I'm celebrating that tonight. I'm really excited about that. We have a great show planned for you. It's the end of Women's History Month. March is Women's History Month, and why annuities should be part of your retirement plan is our topic tonight. So as people are starting to come in, I want to say welcome to all those who are watching. Let me see if there's any on Instagram watching so I can give them a shout out. As people start to come in, I'll try to give them a shout out. So for those of you who are watching, if you don't say hello, I don't know if you're watching, so I can't shout you out. I want to say welcome to Mr. Alvin Bassar and Mr. Stewart. Thank you for tuning in, and everybody else who may tune in and just say hello. Welcome to another episode of Tuesdays with Terrence. It's one of the beautiful things for me. I enjoy doing it. I enjoy talking about this, and I enjoy meeting you every Tuesday at this time. So what I'm trying to do right now, it's actually really warm out today, and I'm not turning on the AC. But it's actually right now the temperature. Let's take a look. Temperature right now where I'm at is 77 degrees right now. It's about 77 degrees. And tomorrow's supposed to be 84 and rainy. Thursday 83, Friday 80, Saturday 82, Sunday 73. Monday goes back to the 50s. So I'm really excited. I have my fan. Let me make sure I turn this volume down and make sure I can watch it on different platforms as well. Let's see. Badui Financial. Yep, put it on there. Yep, I can see it. I'm live. And for those of you who are watching, welcome to the show. Welcome. We have a great show planned for you tonight. So make sure you sit back, you tune in, and enjoy the program. Brandy Hubbard, good to see you. Man, thank you for dropping in. Brandy, can you believe it? Tomorrow will be 10 years I'm with ACA. I'm not 20-something like you, but I'm trying to catch you. So one of these days, I'm going to catch you, Brandy. So tomorrow will be 10 years, so I'm celebrating 10 years of American Classic Agency, the company that cares. So it's actually a beautiful thing that tonight we're going to talk about why people need to have annuities in part of their retirement portfolio. But just before we do that, though, let's take a look at markets and see what's going on. Wow. The NASDAQ, the Dow was up 1,125 points. Woo! The NASDAQ was up 795. The S&P was up 184. So all that money you all been losing, you made some of it back today. Stock futures are a little change after the major averages post best session since May. That's the best session since May of last year. And, we know the Iran war chokes off the helium of gas and all that stuff. But the markets were up today. So some people made some money today. And I'm glad for that. I'm glad. Thank you, Brandy, for my 10 years with American Classic Agency, the company that cares. As a matter of fact, I might change my background and put American Classic Agency on there. Maybe I might do that. Let's take a look and let's do that. Change my background. Let's see. Boom. Yeah. American Classic Agency, the company that cares. It's 10 years in the business. So not the 10 years in the business, 10 years in American Classic Agency. Gosh, financial services, I've been doing this for 40 years, since 1985. So, but I'm excited about the show tonight. I think it's a great opportunity to talk about the subject of annuities. And for some of you, as a matter of fact, today, yesterday, I noticed one of my clients, some annuity money came in. We did a rollover for them from the former job. We moved some money over from a couple of companies, and I'm really excited about that. We moved some from the Capital Group right out of Norfolk, Virginia, and some out of TIAA right out of Charlotte, North Carolina. And this client was a referral from someone who invited me to their show, and I've been on their show as well. It's one of those beautiful things. So someone says, oh, there's a question on there also. Let me put my glass. This is my cute glasses, right? Let me see. There's a question on here. Let's see what it says. So how is anybody able to still feel comfortable with what's going on? That's a good question. We're going to get to that in a moment. All right. So just want to make sure, get these glasses off so I can look cute. I want to look cute on the show. These are prescriptions or what, but these are old prescriptions, but it's just like cute. It makes me feel handsome. And you guys know I'm full of myself. So we're gonna tackle your question in a little bit. We'll tackle your question. So for those of you, let me just tell you again, for those of you who've tuned in, welcome. Tomorrow will be 10 years. I'm with American Classic Agency right above my shoulder, the company that cares. That's my IMO. We're actually hiring as well. And I want to make sure you see American Classic Agency. See that? American Classic Agency. Our services are debt elimination plans, tax-free retirement, life insurance with living benefits, like life insurance you don't have to die to use. 401k, TSP, that's thrift savings plans, IRA rollovers, 401k rollovers, 403bs, 457s, mortgage protection, disability insurance, college planning, annuities, infinite banking concepts, all of that stuff. And if you are considering a career in financial services, you want to reach out to me and I'll tell you more about that. You want to reach out to me and I'll tell you more about that. All right. So American Classic Agency, the company that cares. Like I said, 7 degrees and I'm not turning on no AC. No. You're going to wait. So I might be fed in during my show. And, you ever see like Oprah has it's just the Oprah Winfrey Show, the Arsenio Hall Show, American Classic Agency, see that? American Classic Agency. So I'm trying to be big shot, All right. So how is everyone doing? It's Holy Week, they call it. Sunday is Resurrection Sunday. It's a Holy Week. If you're a Christian, if you're a Jew, it's Passover week. So I think some kids are on spring break this week. If you're Jamaican, you want to eat the Easter bun. The Easter bun, they have that on usually Easter bun and cheese. That's what they call it, Easter bun and cheese. That's what the Jamaicans have. But it's exciting. It's exciting for me to talk about our topic tonight. Like I said, the markets were up very high today, and there's a question in the chat that I will address it a little later. But maybe I can address it now. It says, so how is anybody able to feel comfortable with what's going on? Well, that's a great question. It's a perfect segue into my topic. The reason why people can feel comfortable with what's going on is that the topic I'm going to talk about tonight gives you guarantees. It gives you guarantees better than the bank. It gives you liquidity, partial liquidity, and then full liquidity. It gives you control. Liquidity and control. You want that. And you want to be able to use it, as you choose to. All right. So tonight, our topic is annuities. And basically what an annuity is, okay, it's just a contract. It's an insurance product. It's a contract. When you actually hit the lottery, and if you take 20 years, that's an annuity. When you have your pension at work, it's an annuity, right? An annuity is basically a contract between an insurance company and an individual that promises an income you can never outlive. So an annuity is a contract between an individual and an insurance company that promises to pay an income you can never outlive. Now, there is something that a lot of people do with their annuities. Not a lot of people, some people do. They do what's called an annuitization. And annuitization is when, like when you retire and you get a pension and they give you a certain amount over your life for as long as you live, or you could do it as a joint life with your spouse or a child or someone like that. That's annuitization. We're not going to talk about annuitization tonight. We're going to talk about how you can use annuities as a financial planning tool. And some of you guys, let me check something here. Some of you guys, I think, are perfect clients, and you can do it with a little, as $100 a month. And there's some single premiums. We have what's called single premiums, where the minimum for that is $25,000 or more. Like if you do rolling over a 401k or 403b, or if you got CDs in the bank, or if you have just cash sitting in the bank, I advise you to get it out of there and get it into one of these programs that I'm talking about tonight. And those of you who are interested, my information is scrolling. You should be able to get my number, or you can send me a DM. What I'm going to do, I'm actually going to send this this to somebody who I met over the weekend. I was in New York for a friend's birthday, and it was really, really nice. It was well done. It was classic, man. It was really, really classic and sweet and nice. And I met a gentleman, and we just started talking, having conversations, and asking where he's from. And he said Dominica, and I'm like, I'm from Dominica as well. I asked him what village he's from. He told me, and the rest is history. And he said, "Man, I was just about to do some call my union." And I said, "Man, let's have a conversation." I gave him my card, and we planned to talk and meet. So I reached out to him. I left him a voicemail. There he is. I'll send him that so he can take a look if he wants to. I'm going to send it to him on a regular text as well. FERN. There he is. I'm going to say I'm live. Take a listen, man. I'm going to say I am live. I am live. So please take a listen. Okay? So please take a listen. Please. He's a construction guy. So maybe he will be able to. Maybe he won't be able to. I don't know. So what I've done, I've reached out to him. I've sent my texts. And basically, now it's showtime. All right? We're going to talk about how you can use annuities in your financial planning. So again, I want to make it very clear. Hold on. What did let me see, Mariana? What did she say on here? Well, let me see this. My reading glass. I have little to nothing to invest. However, would love to make it grow. Well, you know what? What you need to do, young lady in New Jersey, we need to have an appointment. As a matter of fact, pretty soon next month I'll be going to New York to see some clients, and next month I have to go to Boston to work. So when I go up, I'm going to reach out to you, and then we'll be able to sit down, have an appointment, and I'll show you what you can do with what you have. All right? So when you get my call, take my call this time. All right? When you get my text, I'll text out and reach out. So I'm going to show you how you can make it grow. So one of the first things, liquidity is very important, especially if you're in your 50s and 60s, right? Why is it necessary for you to lose money, take risk? Like the market has been so choppy lately. I was watching one of my friends' 401k. At the end of the year, there were about 280,000. as of like earlier this week, they were like 240,000. Like they've lost almost $40,000. Now, but the point about it is it's a book loss, right? And I have another potential client that I'm working with, and they have a large amount. They have about almost $1 million. And I'm trying, work with this individual to do what we call an in-service rollover. If you're age 59 and a half, you can move your 401k, your 403b, your 457, your TSP, your retirement accounts. You can move it and have liquidity and control, because right now you're paying fees to the management companies, and there is no reason for you to do that. And also what we will do is, as an incentive, we'll give you, a 10% bonus. So for example, this lady who I'm trying to work with right now, who, almost $1 million, if she did that, maybe 900,000, that's about $90,000 on day one that she have accessible. I want to say good evening to Melinda Frazier. How are you, darling? I was in New York, but I couldn't get to see you. I was only there for like a day and a half over the weekend, so I didn't get to see you. But what I want to make sure that you people understand is that making sure you have liquidity and control of your money is key. Now, some people will say, well, it's with the administrator. Well, if you're under 59 and a half, you actually can't touch it if you have a 401k or 403b. If you're over 59 and a half, you can do an in-service rollover. And if you have 401ks from old jobs, all right, if you have 401ks from old jobs or 457s or TSPs, this is the opportunity for you to move the money and protect it. Because if you're in your 50s and 60s, you don't have a lot of time. Now, some people may say, I'm going to retire in 10 years or in 15 years, but that's not a long time. It's really warm today. I saw a post that someone made from my high school in Boston. I graduated high school in Boston in 1982. And this individual made a post of the building. It's no longer, it used to be Boston Tech. Now it's called John D. O'Brien School of Math and Science. It's an examination high school. Now it's Boston Latin Academy. And someone made a post. They were at a light and they took a picture. And that school, will always be Boston Tech to me. But what I can say about it is it taught me that, as you get older, you have to make wiser decisions. You have to make wiser decisions. And listening and making those decisions is actually paramount for each and every one of you. Are you doing that? Now, some of you say to me, you want to talk to me, but you got to make yourself available so I can talk to you and show you the options. Now, I don't believe anybody should lose money. However, as you get older, it's harder for you not to lose, because if you're in the markets, you're probably going to lose, Melinda, next time, definitely when I'm coming there for work, I'm definitely going to reach out to you, but this one was just like for a function that was there for Saturday night. So what I want to say to you guys is simply this. Tonight, we're going to talk about why an annuity should be part of your retirement planning. Okay, let me give you some of the benefits, the pros. You can never lose a penny. You have access, liquidity, and control. You have guarantees. You could use it as a collateral assignment. If you're purchasing property and you want to show that you have collateral, you can use that. It's protected from market losses. When the market is up, you participate in the gains. When the market is down or it's crashing, you don't lose a penny. I just told you, I just watched someone's 401k, and since January, they've lost over 40,000. Some people have probably lost more. Maybe they're more aggressive. Maybe they're more conservative. But the point still remains is when you hit age 50 on, you should be thinking about, protection, growth, protection, accumulation. Because pretty soon you're going to be in the distribution phase. Now, remember, you don't have to take, if it's qualified money, I'll explain to you the difference between qualified and non-qualified. Qualified money is 401k, IRAs, Roth, TSPs, 403bs, 457 plans. All those are qualified plans, all right, through the IRS. Non-qualified money is like money in CDs. Now you can have a mutual fund that's qualified, through Fidelity or Empower or the Principal or John Hancock or any bank or credit union. You can have qualified money that's in those vehicles, money market accounts. However, you cannot commingle. Like this is one phone and this is another phone. You can't put them together. That's commingling of qualified and non-qualified funds. That is actually illegal. You can't do that because if you do, you're going to be penalized. And also, you don't have to start taking qualified money until your age. For some of you, it's 73. For some of you, it's going to be 75. It's based on how old, what year you were born. All right. The older G's, some people have to start taking it at 70 and a half. I have clients who are taking what's called their minimum required distributions when they turn 70 and a half. Now, your minimum required distributions are not even ready to be taken until you're 73. But if you're born like Melinda, I'm looking at Melinda, I know her age, she cannot touch hers. Not, let me rephrase that, not touch. She can. She don't have to take her qualified money until she's 75 because of the Secure Act 2.0 that was passed a few years back. So those are some of the benefits of having an annuity as part of your retirement portfolio because of the guarantees. Remember, mutual funds, they go up and down. Like today, the market was up. So everybody made some kind of money, but the market's been very choppy. We don't know what the future holds. We don't know what's going to go on in that Iran situation. Oil is up the chain. Actually, I was surprised. I was in Long Island, New York, and gas was like $3.89 that Saturday, and then that Sunday was like $3.90. No, that Saturday morning was $3.89, and it was $3.99 later that day. So what I'm saying to you guys is that you have to protect. I want to say good evening to Valda, Mary, Peltier, Breedy. Good evening, and everybody else who's tuning to Tuesdays with Terrence. Welcome. Folks, as you start getting closer to your retirement, you need to make wise choices. You have to protect what you have, and you have to know what the rules and regulations are. You need to know your rights and options. I know someone who I was talking to who was telling me about they know someone who was retiring and moving back home, and they went and they took all of their retirement money, and they paid so much in taxes. Well, I would have advised that individual to take it incrementally or take some every year. And God forbid if something happens to you, you have beneficiaries, the money's going to go to them without any penalties. But thinking of, I want to take my money and put it in a bank. For what? You have access to it. Plus, if you are retiring, and you are a U.S. citizen, and you're going to retire back home, you're going to come up to do your taxes. You're going to come up for your medicals, because you have to. And what you do, when you're up, you get some money, you take it back down with you. Whether you get an international bank check or you wire the money or whatever you do, you do what you got to do. But it's important that you don't make foolish decisions because, you listen to Tom, Dick, and Harry. One of the things that aggravates me about what I do is when people got to talk to their son and their daughter and their uncle and their cousin Ricky, and not, I know you trust those people, but your son is a mechanic. You should be trusting with your car. Don't ask me about your car. I can't fix it. I don't want to know how to fix it. I can help you change your tire. I can pump gas in your car, but I don't know how to change your oil. I don't know how to fix your engine. I don't know any of that stuff. Take it to your son as the mechanic. But on the financial part, talk to a licensed financial person who can give you good advice. That's just wisdom. That's just wisdom. So when you have an annuity as part of your portfolio, you have guarantees. Now, if you want to take some risk in the markets with mutual funds, stock, bonds, crypto, Bitcoin, some people have Robinhood accounts, some people have, different brokerage accounts, Charles Schwab or Fidelity or whatever. And I see so many people who they're how would I say this very diplomatically? Not to ostracize anyone, because I have to be very careful what I say. Just because you have money doesn't mean it has to be in fidelity or in power or the principle. All right. The companies that I deal with are over 100 years old. Fidelity is not. Nothing is wrong with Fidelity, by the way. Nothing is wrong with Empower. So nothing is wrong with TIAA. Nothing is wrong with the capital funds. Nothing wrong with Vanguard. All those different companies that you guys have your money in, ain't nothing wrong with them. What I'm saying to you is I want to give you more control, and I don't want you to pay any fees. If you're paying 1 to 2% fees, so let me check this out. I'm going to do some simple math right here. And I'm not as smart as you guys, okay? So I gotta use my calculator. So I'm talking to someone who has about $950,000 in their retirement account times 2%. That's $19,000 a year in fees. Do I'm gonna pick up Melinda. Melinda, for $19,000, girl, you can take a trip around the world. You love to travel, right? So why would you do that? Because you've been there for a while? So what? Learn about the different options and the rights that you have so that you can have liquidity and control. Now you may say you have liquidity over there in control, but then you have the market fluctuations. Why is it acceptable at this stage in your life for you to be losing money? Why? I don't understand. Why do you guys think it's important? I don't believe you should. And all I'm saying here is that people who are doing that, I don't get mad at you. I just feel like you don't know any better. And because you don't know any better, you have to talk to someone like me to educate you, teach you so that you can make the right decisions. And folks, let me tell you something. If you don't trust my judgment or my advice, why would you listen to me? I've known people who've took my advice and gone somewhere else. And I'm not mad at them. It's okay. I'm not mad at them because as long as you're protecting yourself. Yes, I would love your business, of course. But my point is, you're not watching me because you think I'm cute or you like my goatee or you like my glasses or you like my big mouth. Oh, no. You're listening to me. Some of you is because you want knowledge. And some of you who are not in the US, you watch me because you're supporting me, and I'm grateful. I'm really, really grateful. But I'm just saying to you guys, you got to make wiser decisions. You got to. And I know you want to. Don't let pride hurt you. And sometimes people are not ready, and I have to respect that, and I do. But as you go, make sure you have something in place with protection. And for those of you who were at other jobs, why is that company still holding your 401k? I just finished doing one for someone week before last out of New York. Actually, the last check came in yesterday. I just texted them and told them the last check came in. And this person was a referral. I've never met them. As a matter of fact, I have a bunch of clients I've never met. They see me online, they know of me, or they know someone who knows me, and I'm credible, I'm respectable. They know that they're protected with me, and that's what we do. We make sure that they stay protected. I want to make sure that everybody who's watching, and if you cannot afford to do a lump sum, I don't know. Everybody don't have 950,000. Everybody don't have 100,000. Everybody don't have 25,000. You can do it as little as $100 a month, but that's money you could never lose. And I always tell clients and potential clients, I only want the portion of your money, the percentage. So for some people, it's 100%. Some it's 50. Some it's 75. That person that I did that stuff for recently, the last check came in yesterday. They didn't do everything, but they did a good amount. And there's some people who's like, I trust you explicitly. I want all of my stuff over here. I have some clients like that. I have some clients who last week I went to see a couple of clients, they're identical twins, and everything that she does is through me. She trusts me explicitly. And I make sure that I protect what she needs to do. You see, you guys hear me talk about income protection, debt elimination, and legacy creation all the time. That's true, but your legacy has to do with you as well. So as you get older, if you have no health challenges, right? Anything is possible. We know that, right? But nowadays, people are living to be 80, 89, 87. I think women now are going to be living to 89 and men to like 85. You know, some of you have family. My grandmother lived to be 103. So what you never want to do, you don't ever want to run out of money. You do not want to run out of money. So one of the key things that you do is make sure you have different streams of income. I have clients who are putting a lot of money into equity index universal life policies, and those policies they can access some of that money tax free. You see, with annuities, it's annuities whether they're qualified. I talked about qualified and non-qualified, right? Qualified and non-qualified are considered retirement vehicles. They're both considered retirement vehicles, right? And because they are retirement vehicles, if you have non-qualified money, your cost basis, in other words, cost basis means the amount that your after-tax money is your cost basis. So you only pay taxes on the earnings. The earnings could be, interest, you want to call it that, or it could be positive MVA, market value adjustment. And you don't pay taxes on the cost basis, just the earnings. But if you have a qualified account, you got to pay taxes on all of it because you've been deferring taxes. I ask clients all the time, let's go into business together. And you put up all the money, you take all the risk, you manage the thing, and in 30 years, you money you owe me. And everybody always says no. But everybody else is doing that with the government right now. That's what they're doing. And I'm not mad at them. They don't know any better. Some people are scared. Like if the government, whatever the government tell them to do, they do. Like the government don't have your best interest at heart. The government has its best interest at heart. I remember when Nancy Pelosi was Speaker of the House, someone asked her a question one time, and her answer was, do you know how much money is in qualified plans? Trillions of dollars. Trillions. The U.S. debt is about $39 trillion now. But, I'm saying if there's trillions of dollars in 401ks, 403bs, 457 IRAs, all those different accounts, right? Uncle Sam knows they're going to get theirs. Back in the day, when I was a young banker in the 80s and stuff, I remember they used to let you roll over your money and they send you the money and then you had 90 days to roll it over into a vehicle. And people were taking advantage of that. They were using the money and they didn't have the money to pay. And then when Uncle Sam in 90 days come after them, they couldn't pay their tax bill. So now if you have qualified money and you want to take it out, Uncle Sam says, you got to pay the taxes up front. The companies, all the fiduciaries, right, have to take the taxes out. The only time you don't have to take taxes out is if you're doing a qualified rollover. You're rolling over from one fiduciary to another. It's like going from one room to another room. You're still in the house. But if I go from my room outside my house and I drive to your house, I'm in a different house, right? So that's what we're talking about. So you have to make sure that you put some of your money in annuities. Some of you have monies in CDs. Why? Oh, I get 2% or 3%. So what? Guess what? Someone fall because you didn't shovel, and they can go look at all your money in the bank and sue you. And with your CD money, you cannot get a guaranteed lifetime income from it. It can run out. Life happens, right? I don't know, a new roof, I don't know. Life happens. So make sure annuities are part of your retirement portfolio. Now, there's single premium annuities where you put a lump sum, right? That's a single premium annuity. Then you have a flexible premium annuity where you keep adding to it on a monthly basis or as often as you can. You can do that with qualified or non-qualified, IRA, Roth IRA, 403bs, all of those things. You can do that. Traditional IRAs, you know, and you make the contributions all the time and watch it accumulate and grow, especially if you're a little younger, because you don't have to touch it until you're 73 or 75, and you can touch it when you're 59 and a half. So what people have to realize is what they have to do is start, at 59 and a half, you may need some money, but you may not need it. I have a client right now in North Carolina who's taking minimum required distributions from her retirement, and she don't need the money. Her house is paid for, her cars are paid for. The only bill she has is utilities, insurance, her Medicare premiums. That's it. She doesn't have any. She hasn't got any debt. Utilities are not debt; they're bills. Debt is like car loans. I remember she bought a car. Was it 10? I don't remember how many years ago she bought. She bought it cash. I don't recommend you do that. I recommend, you use an infinite banking concept and, you know, do it that way. But that's how she is, and if her checking account goes on under 50,000, she gets a heart attack. I don't get a heart attack when mine's over 50 cents, under 50 cents. So the point I'm trying to make here, folks, you have options. I want to say good evening to Miss June Bardui. How are you? My big sister in Boston. How are you tonight? Hope you're doing well. So for those of you, a question was asked earlier in the program. I don't have much money. What should I do? Well, you can do a flexible premium annuity. You can put a lump sum in and then put some every month. $100, $200. Some people can put 500. Some people can put 1,000. Everyone's financial situation is different. Everybody's different. Don't compare yourself to the Joneses. I was on a podcast last week, and I was, on Q95, a radio station in Dominica, with Dr. Simone, Push Past Ted, and I was telling people, don't compare yourself to other people. Only look at you. Look at your situation, where you are at, what you're trying to get to. And some of you, I've mentioned to some of you who own homes and have 401ks and, stocks, bonds, funds, brokerage accounts, cars. You all need to have your accounts, go see an attorney, an estate planning attorney, and get a revocable living trust and put everything in it. Because I keep telling you all didn't listen to me. Oh, I got a will. There's a client of mine that I called today accidentally. She called me a few weeks ago. Hey, Terrence, how are you? I said, hey, how you doing, girl? I'm good. She said, guess what? I said, what's wrong, girl? She said, I took your advice. I'm going to get a revocable living trust. I've been telling her that for 10 years. Oh, I got a will. Well, guess what? Her son passed unexpectedly in an accident, and he had a revocable living trust, and he was divorced. So the trust specifically said what to do. Wills can be contested. People come out of the woodwork. Your old boyfriend be coming up, Melinda, and telling you, hey, you know what? When we were dating, she told me down the road when she died, some of her money belongs to me, or her house belongs to me. People can contest stuff. You ever see how people come out of the woodworks, family and friends fighting like cats and dogs when money's involved? It doesn't matter if it's $250 or $250,000. They're like vultures. It's ridiculous. So protect yourself. And when you protect yourself, make sure, folks, that you're talking to a licensed financial pro like myself, who can give you the right advice and information, especially if you're retiring soon. In the next year or two, we need to speak immediately. If you have 10 years to go, we need to speak immediately. If you have 40 years to go, we need to speak immediately. Because what happens? The earlier you start, the better it will be for you down the road. The earlier you start, the better it will be. And putting the right things in place. I hate to see people walking naked. You know what I mean by that? Having no living benefits. Their income is not protected. Man, I was just talking to someone who just told me about someone that was diagnosed with stage 4 breast cancer. It's hot out here. Stage 4 breast cancer, right? And I said, what? No living benefits. I see it all the time. I have so many friends on social media who have no living benefits. Protect your income. You guys are walking naked. Like we say in Dominica, tutu ni. Tutu ni. No clothes. Now, if you have some health challenges, it's too late now to get living benefits. But it's still not too late to protect it because you can use someone else as a way to get your money safer and you can grow for you. And with annuities, you don't need any kind of um, health equity. I don't care if you got cancer, AIDS, you're dying, you can still do it. I don't want any of that things to happen to anybody, but you can do it. There's no underwriting. And what we could do is to make sure that we even have options where you can get what we call GLAIR, guaranteed lifetime income rider. And let me explain something to you guys, for some of you who don't know. You might say, well, I want to get like $500 for the rest of my life. You know what? Think about it. 1,000. That's not including your social security or if you have a pension on your job. Jobs don't even do pensions anymore, or whatever else things you've done, or if you have property or you're renting. It's income. It's guaranteed. That money's guaranteed. I have no social security will be guaranteed for the rest of our lives. I'm not an economist. I'm just saying to you guys. And you may say, well, who backs that up? Well, I represent companies who've been this one company that I do most of my business with. They've been around for over 178 years. They've been through everything: Spanish flu, World War I, World War II, Korean War, Vietnam, COVID, Spanish flu, everything. And they're still going strong. You need to partner up with a strong financial company that has good ratings with AM Best, Moody's, and Fitch. Those are the kind of companies I work with because I have to protect you. I have a fiduciary responsibility. In other words, your best interest is out. And people always say to me, man, what do you charge? I could charge you also money there. I know some people who do. But you know what? The advice that I give you, there's no price for it. So what you do is become my client and tell somebody about me, and I get more clients. That's how you can pay me. And even if you didn't become my client, you can still refer me, because while you're watching my show, because you like me, I'm your family member, I'm cute, I have a big mouth, I just déparler, I just give mépris, I don't know. But whatever the reason, you keep watching. I am grateful. There's people who watch religiously, and I don't take it for granted. There's people who share my content religiously as well, and I am so grateful for that. Well, what I'm saying to you is make sure that you have a partner, a financial services partner that can protect what you have, make it grow incrementally, slowly but surely, incrementally. None of these like stock market, right? It grows slowly. The market crash, you stay there. The market go up, you go up a little bit. It's a win-win. It's not rocket science. It's not rocket science. I haven't got to sit here and explain to people why you should do this and why you shouldn't do this. I'm saying to you, make it part of your portfolio. Make it part of your portfolio. And if you do that, folks, you can have guaranteed lifetime income, because life happens. Just because you're retired, the bills don't go away. Some of you are retiring with mortgages. Why? If you're in your 40s, 30s, 20s, and you have a mortgage, man, I don't care if you're in your 60s. I can get you out of debt in under 9 years without spending any additional money that you're currently spending. And it's hard. It's a hard concept for some people to grasp, because they're accustomed of doing what they know. And so that's why I keep educating pontificating, teaching, showing. That's what you need to do. Wouldn't it be nice when you retire, you don't have a, you know, it's so funny. I always tell people, right? Mistakes that I made, you guys don't have to make them because you have a me. Wouldn't it be nice when you retire at 65 or 60 or 62 or 67, you got no mortgage, no car notes. Now, if you want to get another car, you could, but you know, you can use it, you can get it from the National Bank of You. Why wouldn't you do that? Well, I got good credit. And I go to the bank and I get a 2.9% car loan. Yeah, but you're still paying the bank. You have the money. Pay you. Grow wealth while you're eliminating debt simultaneously. And if you have annuities, I have a client. I told you guys, I keep talking about this client. You know, she's been at a job 39 years and she got laid off 2 weeks before Christmas, this past Christmas. She called me the next day after she got laid off. And I smiled, not that she was laid off. I was like, I'm so sorry. But I said, guess what, girl? For the last 5 years, you've been taking my advice and you've been doing stuff. We had already done in-service rollovers. You know, she turned 65 last Thursday. You know, we got her Medicare supplements, you know, and we're using her 401k that we rolled over into an annuity. We're using that as premiums to eliminate her debt. So she can pay off her home. You know, she owns two homes. One, she rents out, and the rent is more than the mortgage. So her mortgage is guaranteed every month for that house. So we're not even touching that because that's guaranteed money every month. But then, you know, she was going to retire probably at 65 or 67. But guess what? I told a girl, you know, you're healthy. Just keep going. She goes, Terrence, I'm tired. But guess what? She got a mortgage at 59, a 30-year mortgage, 69, 79, 89. So she'll be paying mortgage till 39. Until she's 89, guess what? She'll be out of debt by 69, going to her 70th year. She'll have enough accumulated cash to pay off her house if she chooses to, and then pay herself back by returning it if she wants to. She chooses not to, that's still her choice. But I always tell people do it, keep paying it back because you want to access it again to go on a cruise to the Bahamas, the Maldives, you know, Greece and Dubai and Hawaii and the Caribbean and, you know, Bora Bora and, you know, Fiji and Turks and Caicos and the Dominican Republic, Barbados, Jamaica, where I see all of you guys going all the time. Wouldn't it be nice? Wouldn't it be nice if, you know, when you retire, you can do all these things and haven't got to worry about, you know, car notes, mortgage, student loans, because you've eliminated all that? Why won't you do that? You know, it's a rhetorical question. Don't answer in the chat. Why wouldn't you do that? Why would you want to be like 70 years old and still pay the mortgage when you could have eliminated it in your 50s or 40s? I have this client's young couple. It was a referral. Their mom lived in New York and they live in a different state. And this young couple, they were like 38 and 40 at the time when we did theirs. Man, I am so freaking proud of them. And this individual said to me, Havis, I wasn't aware that the big banks are using this concept of infinite banking with all this cash. I said, well, and this person, they get it because they work with those companies, those banks, and they audit them. And I said, I wish the average John and Joe that I talk to on Tuesdays with Terrence, or they come in on my calendar, would be like you. But you know what? Rome wasn't built in a day. Some people are a little slower. Some people tell me they get it. I don't think so, because if you get it, I don't see no reason why you wouldn't do it. But there are reasons some people don't, because some people feel like they're not in a good space, and that's their right. And I have to respect that. But I just want to see, especially, I want to see you guys. I don't want to see you cutting back on what you're doing. I just want you to redirect inefficient funds into efficient areas. That's what I want to see you redirect it. Like it's going that way, redirect it to go this way. And he said you were putting it there. I want you to see you putting it there in that room so that you can access it when you want, on your terms, without permission. Your 401k, you know, over 59 and a half, you know, over 59, you need permission. You have to have a hardship, a disability, or something. You know, that's why I talk about tax-free retirement using life insurance with the index universal life and the different whole life policies where you can actually access those funds before. A lot of people like to tell me about Roth IRAs, and I don't laugh at them because I understand that's good, but why would you want to cap yourself on how much you can put in? Why cap yourself? Uncap yourself. What if you get a big fat raise or big fat promotion? You can only put the same amount into the IRA or the Roth. And those are the, but you know what? The banks are not telling you that. The government's not telling you that. And the media is not telling you. So they're not telling you because I don't even think they want you to know. Why don't banks disclose, you know, how much millions and not millions, billions of dollars? One time I did a show and I went to JP Morgan Chase, Citibank, Wells Fargo, Bank of America. There was a lot of different banks. I was showing you guys how you could see how much money they have in cash value, how much billions they have in there. Why? Why are they doing that? Because they understand. And they don't want you to understand. I keep telling you guys, you don't have to be wealthy to use the strategies and the concepts that the wealthy use. You just have to know. You hear me talk about 7702s all the time. Life insurance, the reason why there is restrictions on it, because those in Congress know they can dump money in there and they can access it tax-free. Back in the day, before they had all these different IRS codes, rich, wealthy people were just dumping money in there like crazy. It's a legal way to hide money. You can't do money laundering, that's illegal. But this is a legal way that you can put money into a program or a vehicle that you can access it tax-free. With the annuities, you access it tax deferred. If it's non-qualified money, every money that you've already paid taxes on, you don't pay taxes on that twice, only the earnings. The qualified money, you got to pay contribution, taxes, everything that comes through on it. You got to pay on it. So if you are in your 50s and 60s, you need one of these ASAP. If you're in your 40s and 30s, you can do it too. But if you have old jobs and you have 401k sitting there, let me help you. And I would recommend that you have, you know, an IUL or some form of index universal life policies or whole life policies that you can use as a way to build cash that you can access tax-free or tax favored if you do it the right way. Folks, it's not rocket science, man. So annuities should be part of your portfolio. I'm going to show you. If I don't go into deep detail when I talk about these things, because if you want to learn more about annuities, let's get together. Get on my calendar. You all, some of you have my number. My number is scrolling right on the screen. Let's show you what we can do. Let's eliminate your debt. Let's, protect your hard-earned monies. All those monies that you did back in the day, that you saved with 401ks and 403bs and 457s and TSPs, IRAs, Roth IRAs. All those monies, do you take in risk with Fidelity and Vanguard and John Hancock and Empower and other securities? Let's secure that for you. Let's secure that for you. Let's secure it. Folks, I just told you I just did one for a client and the rest of the money just came in yesterday. This client is going to sleep like a baby. They will never lose a penny. They got the 10% bonus. The monies that they lost in the market since we first talked, they'll make that up on day one, you know, with a 10% bonus. If their balance was 50,000, they would have 5,000. Folks, it's not rocket science. I want to say hi to Zenith, the Atlanta, Georgia Queen. How you doing? And Miss Self Development, actually, Valerie Rodriguez, my business partner. How are you, darling? Good to see you. And everybody else who's watching tonight. Let's use annuities as part as your retirement plan. We can do it on a flexible basis. We can put $100 a month, or we can do it as single premium. We can put 100 grand, 200 grand, 300 grand, 25 grand, 50 grand. You got $1 million? Let's do it. You got 2 million? Let's do it. Let's protect it. Stop taking risks. The market was up today, yeah, but your account's been taking a beating all week, all month, with the uncertainties that's going on, guys. The uncertainties that's going on, you know? Yes, that is me. That is H. I look different, but looking good. All right, you like the goatee, Valerie? That is me. I know you haven't seen me in a while. I got the, you know, my son and some others said they love that. So I got the gray on. I'm trying to look grown and mature, grown and mature. So yes, so all of you who are watching tonight, you need help, reach out to me. My phone number is scrolling. It's it's not scrolling. You can't see it. Area code 864-607-1361. 864-607-1361. But most importantly, guys, if you're in your 50s and 60s, you should be talking to me ASAP. Let me show you how we can build something for you and protect it. You will never, ever lose a penny at this stage in your life. You're retiring. I'm the guy. I'm the safe money guy. Every Tuesday at 7 p.m. Eastern Standard Time, I educate, I pontificate, I teach, I show, I tell. I don't show and tell everything because I can't get personal. You can't give me specific situations because I have to ask you questions of people who know your business. But my information is scrolling right at the bottom. So if there's any questions that you have, don't feel bashful. Make sure you have an annuity as part of your retirement portfolio for safety, liquidity, control, and guarantees. Safety, liquidity, control, guarantees. You will never, ever lose a penny. Zero is the hero. My name is H. Terrence Bardui. Some people call me H. Some people call me Havis. Some people call me Terrence. Some people call me Mr. Bardui. If you're from the 767 Whitey Kubuli, the Commonwealth of Dominica, tall is her body, and you're from the parish of St. Luke, Point Michel, aka La Pointe, you call me Luku Boy. Dominica made me. Boston raised me. Now the South sustains me.
Battery medium.
As we close,
Virus alert scammer.
you want more information? You want more information? Sorry, I put my speaker on. As we close, you want more information? Reach out. Reach out to me. Get in my DMs. You know how you slip in people's DMs? Like when you're like a girl or a dude, or you like influencer, you like what you slip in your DMs. Slip in my DM and say, hey, I want to know more. Let's get in. And like I said, my number is scrolling. You can see it there scrolling. American Classic Agency, the company that cares tomorrow, will be 10 years I'm with American Classic Agency. I have over 40 years of financial services experience as a licensed financial pro. I'm here to protect your money. You will never, ever lose a penny. There's guarantees, liquidity, control. Money talks and the other stuff walks, guys. So thank you for tuning in tonight. And as we close, I'll play my theme song, which talks about the roots of my rise, from Dominica to Boston, you know, where I grew up to now where I reside. So, here we go. Good night, everybody. Like and share. Get on my schedule, on my calendar. Dominica made me. That's where it all began. Island breeze, coconut trees, the heart of my plan. From the hills and the smiles to the songs of the sea, that island spirit molded the person I be. Good night, everybody. Boston raised me with its hustle and grind. City like shining dreams intertwined. In the heart of this town, I found my way. A licensed financial pro, ready for the fray. I wrote this song, man, my theme song, to tell you I'm a licensed financial professional who can help you. On the snowy streets, learn to stand tall, navigating life, every rise, every fall. From the commons to the brownstones, I made my claim. With every lesson learned, I embraced my name. Boston raised me with its hustle and grind. City like shining dreams intertwined. In the heart of this town, I found my way. A licensed financial pro, ready for the fray. Yeah, yeah, woo! Now the South sustains me with its warm embrace, a community of strength and love in every space. From the bayous to the beaches, I found my place. In this journey of finance, I've learned to chase grace. Dominica made me, Boston raised me high. The South sustains my soul as I reach for the sky. With every sunrise, I'm thankful and free. A licensed financial pro, a licensed financial professional. Just be me, man. From Dominica to Boston to the South. Good night, everybody. God bless you. Here's the close, the outro. So here's to the roots that shaped who I am. From Dominica's beauty to Boston's Grand Slam. In the South I stand strong with purpose and pride. Together with my journey, side by side. Listen, folks, you need an annuity in your retirement portfolio. I can help you do a rollover, your 401k, your 403b, your 457, your TSP, your IRA, your Roth IRA. I don't care where you have money, in CDs, in bank accounts. Let me show you on a one-on-one basis how to protect what you have. And on that note, I want to thank each and every one of you for tuning in. Don't be scared to like and share, or you can, tell someone about me. Tell them to send me a friend request. I'll be more than happy. Some of you are watching from different countries, but you have family here in the continental United States. My clients are only in the continental United States. I can only help people in the continental United States, not Puerto Rico, not Guam, but the 50 states. And I'd be more than happy to help each and every one of you. On that note, peace. Hasta la vista, baby. Good night, everybody. I love you all. Thanks for tuning in. One love. Until next Wednesday, next Tuesday at 7 o'clock Eastern Standard Time. Bonsoir, bonsoir, bonsoir. Good night. Peace. Hasta la vista, babies. I'm out.